Hey everyone. Of course, if you've been following my channel, you would have probably seen my video where I did an analysis of Nio stock and I answered the question if I thought Nio stock was a buy for 2024. In that video, I said no, Nio stock is not a buy. The EV industry is not one that I would want to invest in for 2024. And so since then, Nio stock price has been falling considerably. So hopefully if you listen to that recommendation, you saved some money and stayed away from Nio stock. But I also now have gotten a lot of questions asking for me to update the recommendation since the stock price is down so much and we've gotten some new information. So that's what I'll do in this video. I'll update my Nio stock recommendation for 2024, whether or not it's a buy, hold, or a sell. So let's jump into the detail. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so like I mentioned, to start the year, Nio stock price was around, let's say, $8.75 per share, and it's now down to $5.66. So it's down nearly $3 per share, or over 30% year to date. That's a significant loss for a lot of investors, and hopefully you listened to the guidance and avoided Nio stock. Now, I know many people are already invested in Nio stock. It's a very popular stock among retail investors, and hopefully I can provide some more guidance here in this video. So let's continue. So one of the things that Nio has done very well is increase revenue. 7.7 billion in trailing 12-month revenue for Nio as it has increased production. And in the last half of 2023, as its new models went into market, its revenue growth actually accelerated. So it did a really good job in those new models matching customer demand. It also removed a freebie it was offering in the battery swap technology. So those sales were arguably more profitable because they didn't come with that free battery swap technology. Additionally, a big change Nio made to end the year was in-house, bringing outsourcing in-house. So it's no longer outsourcing manufacturing. It bought that manufacturing company it was outsourcing to, and it's going to in-house that. Now, what I mentioned when I highlighted that in the Nio video was that it increases the risk for Nio stock. It also increases the potential for Nio stock. So it becomes higher risk, higher return potential. From a point where it was already high risk, high return, it became even higher risk and higher return potential, if that makes sense, right? Because now when you're manufacturing in-house, you have a lot more fixed expenses that will not fluctuate by as much when sales increase or decrease. And therefore, when sales increase, your fixed cost won't increase by as much, and so your profit margin will expand more. And the same is true on the downside. When your sales decrease, your fixed cost won't decrease by as much, and your profit margin and profitability will fall by more. So you've essentially increased the risk of the business. You've increased the operating leverage, which works in your favor when sales are increasing, but it works against you when sales are decreasing. Now, I highlighted that it's too soon to determine whether or not that was a prudent move by Nio or whether that was a smart decision by Nio. It's too soon. They need to digest that acquisition and show us some performance, and then as an analyst I can determine whether or not they're making good use of that investment. For now, it's too early for me to tell whether or not that was a good move. Looking ahead, Nio's prospects for revenue growth are accelerating. 31% revenue growth expected for fiscal year 2024 for Nio, and then another 38% revenue growth expected for 2025 for Nio. That's good news for two reasons. Number one, a 38% revenue growth rate is excellent. It's on the higher end of most companies. And secondly, it's second derivative growth. It's increasing the rate of growth from 14 to 31 to 38 in the 3-year timeline. So that second derivative growth is impressive. The bad news is the company's losing a lot of money on the bottom line. Let me show you precisely how much. So in the latest quarter, negative 639 million in net loss, right? And it's been losing money every quarter going back several years. It's a big losing company. Every quarter, massive losses on the bottom line, as you see in this chart. When will it ever become profitable? The forecast is that in maybe 3, maybe 5 years that it'll become profitable. That remains to be seen as well. It's going to depend on a number of factors, most notably the fierceness of competition in the EV industry. You've read headlines probably all year in 2023, and they've continued in 2024, the fierce price competition. And that's hurtful for every company in the EV industry, regardless of who wins the price wars. It's going to be hurtful for everyone. Even the ones that come out as winners are going to be wounded when they come out the other side because of all these losses they are incurring to impact these price wars or implement these price wars. And they're continuing. Just a few weeks ago, I made a video on more price cuts. Ford, Tesla, and Rivian cutting prices here in the US, Lucid as well. In China, the market leader there saying, everyone better buckle up because we're not backing down. We're going to fight this and we're going to win this price battle. We'll keep going. So everybody better be prepared. So these are fighting words from participants in the EV industry. And that's one of the reasons why I've suggested to avoid this industry as an investor, because of the fierce competition. Not only are prices decreasing, advertising spending is increasing, hiring of salespeople and logistics staff is increasing, supply is increasing. So all of the factors that I look for in what makes an attractive investment are all working against the EV industry. They're nearly all working against the EV industry. So I've highlighted this over and over again about EV companies that I'm following, Nio specifically, and I gave those reasons as why investors should avoid Nio stock. And as you saw so far, the stock is down again for 2024 and its losses continue. Now, cash flow from operations, similar story, negative 1.655 billion in the latest quarter, and it's going in the wrong direction at an accelerating rate. The slope of loss is increasing here for cash flow from operations. That's really bad news, especially as the cost of capital is increasing, interest rates are increasing, and that's making these losses even worse because they're coming when capital costs are higher. So you're having to fund these losses at a higher cost of interest. Not good news, right? So finally, let's look at valuation. Nio is now trading at a forward price to sales of 0.68. Relatively speaking, if you go back all the way to 2021, this stock has never been cheaper at 0.680. Still, I'm not comfortable recommending this stock as a buy. Even though it's cheaper than it's ever been, I still don't feel confident in this company because it's just losing more and more money. Cash flow from operations is worsening. It just added a significant risk by bringing manufacturing in-house. And so all of these factors contribute to my lack of interest in investing in EV companies, let alone an EV company like Nio with massive losses on the bottom line. I haven't even talked about geopolitical risk, being that it's a Chinese-based company. So a lot of factors working against Nio here. I need more information before I can recommend Nio stock as a buy. I need to see how they digest that acquisition and how it will impact its profit margins going forward. And I need more management discussion on that factor when the company updates investors as the company updates investors in 2024. So to update my recommendation for Nio stock, I still do not recommend it as a buy. I would place it in the category of hold, maybe sell in that range. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.